Hello, ladies and gentlemen. My name is Greg Michaelowski. I work with FXDD, but also am a contributor to FX Street on a daily basis. And I'm here today to talk to you about the sterling versus US dollar and take a technical look at it and see if it's trying to dig itself out of the hole that it's been in, out of the selling pressure that it's been under, and have a potential for a move to the upside. In order to do that, I'm going to take a look at a series of charts, and I'm going to start with the daily chart to get a perspective of where we are and where we've been. And if you took a look at this daily chart going back to November, what you can note here is that the market had a high of about 168.76, and we came down and we made a low in May of 142.29. That's 16 big figures, no matter how you count it. A pretty decent move to the downside for a Forex move, and along the way we had lows here and little corrective type moves. The last corrective type move started at this point right here, and I'm gonna take the my Fibonacci line here, and I'm gonna move it up toward where we bottomed in the beginning of this is actually the beginning of March, and that level came in at the 147.82. That's going to be important as we continue our analysis. But at that time, when the market bottomed at this level, what did we see? We saw the market correct in two phases. One, it goes up short of the 38.2%, comes back, tests this bottom once again, and then it takes another leap to the upside, getting within shouting distance of this 38.2% retracement. When it couldn't get above that level, when we started to run into the 100 bar moving average, catch up to the 100 bar moving average, the market had a decision to make, and that decision was, all right, well, we can't go any higher than this. We're going to take this to the downside, and that's in fact what the market did. The market started its move to the downside in a pretty pretty hefty fashion, heading down to make new lows for the sterling versus US dollar. Now, let's fast forward to where we are now, or take this a step even further. And I'm going to grab my Fibonacci, I'm going to drag it down to the new low from that 147.82 level. And what we can see here is that the market from a Fibonacci perspective is still well short of this 38.2% retracement. The good news is that if I zoom in here off of this daily chart, we can take a look at some steps that we have taken. We had a largely consolidative range here, took a move up toward the 146.09 level, came back down toward the midpoint of this consolidation phase, left this tail down here, left a lot of little tails down here, which gave really the lowest or the highest or the lowest close came around at this level right here. Which is pretty well off of the lows, 143.35, almost 100 pips off the lows. And we started to base off of that 35 level when we started to move back to the upside. So this failure to move any lower here forced the market higher. And over the last couple of days, 1, 2, 3 days, we've seen the market move up toward what was our old low. This old low came in at 82. The high here today came in at 69. So we got within 13 pips of that high at 82 in the sterling versus US dollar, which I'm not surprised that we found those sellers against that level, because what is the risk? Traders sell against the high if they stop themselves on a break above that level, because if we do get above that 82 level, we should see further upside momentum for the sterling versus US dollar. So this is going to be a key level on our charts going forward. So now that we have an understanding of where we been and where we are from a daily perspective, let's take a look at the hourly chart now in this currency pair and see what this chart is telling us. And from this perspective, we can see here that the market is actually moving a little bit in an uptrend since this day right here in May 25th. The market has started to move above the 100 and 200 bar moving average, represented by the blue and the green lines respectively. Came down, tested it, came down, tested it. Had this period where the market broke through the 100 and looked like it was giving up the ghost here, and came down to the 200 bar moving average and started its move back to the upside on this day right here. So that gave it a nice positive bias, and we saw the big huge move yesterday that all started from the ability to hold this 200 bar moving average on these corrective moves, started that move to the upside. So today what do we have? We have the new high coming in at 69, and the market starts to come down. Where does it come down to? Comes right down to the 100-hour moving average and finds good support buying against that level. Positive for the sterling versus US dollar hourly chart, and we see the markets move its way to the upside, upside, upside. We don't quite get to toward the high for the day. We can't, Rome wasn't built in a day. But from a retracement standpoint, we did make it up a little bit past the 50% retracement of the move. 146.86 is going to be a key level on the top side that we're going to have to get through going forward. So. But from this hourly chart, we're above the 100-hour moving average. We're seeing these moving averages start to move higher. We tested 200 twice, could not get below that level. We had this low come in, and we've been in a sporadic up and down kind of upward trend here, but nevertheless it is positive. So now let's take the step, even one step, another step forward, and take a look at the hourly, the 5-minute chart. And what we can see here is that the market came up, was moving higher into the London session, went up to the 69 level, found the willing sellers up there against the 82 level, and then started to move below the 100 and 200 bar moving average, and keeping that negative bias until we reach the 100-hour moving average here. That's this level right here, and we found the buyers there. And now the market is what we call in between our goalposts, in between the 100 bar moving average and the 200 bar moving average on this chart. Now, from this perspective, it's saying the market isn't quite ready to move higher. It broke through the trigger, broke through our 100 bar moving average, which says be long, but when it got to the 200 bar moving average, this green line, and looked for a confirmation by moving through the 200 bar moving average, the market said and the market said and it started to come down again to test the 100. Now the market is at a key level here. It's at a key point where it's going to decide, okay, which way are we going to go? Are we going to go back down below here and give up the ghost to the downside and see further corrective moves to the downside, and perhaps even come and test this 47 level of this 100, the level off of the hourly chart that we were looking at previously, the 100-hour moving average? Or is the market going to find support against this 38.2% retracement, against this 100 bar moving average in the 5-minute chart, and start its move from here through the 200, through the 61.8, and on its way to test that key resistance level at the 82 level, and that 82 level once again is the low from this period right here on March 1st, where the market initially bottomed and then started its corrective move to the upside. So in constructing a trade, it's often good to take a look at your daily charts, finding the key levels, trying to find clues that the market's telling you. Take a look at the hourly charts, see the clues, see the support, see the trend, make a judgment that the bias could be to the upside, and then go into things like even the 5-minute chart and seeing if we can hold this key level where the 100 bar moving average and 38.2% retracement is at. We're currently testing it right now. Hold your hats, friends. It's a key point here for the sterling versus US dollar. Let's see if this support level can hold in this currency pair, and the sterling may be able to. If it does, the sterling may be able to dig itself out of a hole and start its move back to the upside in the near term. This is Greg Michalowski with a look at the sterling versus US dollar for FX Street.